reasons. It could be, affairs. It could be domestic violence, a whole range of different bits and pieces where the parties no longer speak to each other. If that's the case, mediation is going to be very, very difficult. If you've got an instance where somebody has felt like the relationship broke down because the other person did something wrong, they may feel a really negative sentiment towards that person. So they may turn around and say, look, I don't care. I just want to make sure that I get more than them, or I don't want to ever look at them again, or whatever it may be. You're kind of forced down the legal pathway, and that's just the way that it is in those instances. But if you can go through some sort of negotiation, and there's people to be able to help with that process.
Welcome to 360 Money Matters, where financial planners Billy and Andrew talk all things financial planning. This podcast aims to increase your knowledge and confidence with all things money. Each week, they will cover topics such as investing, cash flow, budgeting, saving, passive income, debt management, and much more, so you can live a life on your terms without limits.
Hello and welcome back to another episode of the 360 Money Matters podcast. I'm Billy and I'm joined by my co-host,
Andrew. Bills, here we are back again, back on the audio waves, as you would say.
Coming over the wireless, Andrew, to our listeners and our viewers, talking all things divorce and separation today.
Yeah. I mean, look, well, I guess, it's an important topic when you consider that 50% of relationships end up in or 50% of marriages end up in a divorce. And so I think that, some of the things that we've come across is that it can be pretty tumultuous time from a finance perspective. So what do you do to survive it, both during and after a relationship breakdown?
Just thinking, just before we get into that, that's a really depressing statistic, isn't it?
Horrible statistic. It's a really terrible statistic.
And where I'm going with it, right? Obviously, the
what are you trying to say? Two people in this room?
Yeah, no. Yes, so no, that's not what I was going to say. Other than the impact associated with it, but I'm just thinking around the business aspect of the wedding industry, about how much money and how big the industry is and how much money is put in, and everybody who goes through it goes in with so much hope and optimism and wants their perfect day, and this whole industry is built on something that 50% of the time it doesn't last.
Well, maybe everyone's just a helpless romantic, right?
Maybe that's what it is.
50% won't last, but either way, you still bite the bullet, and we did. So
got to be in it to win it.
Exactly right.
Yeah. It's not 1 in 2 in this room. It's maybe someone else.
Yeah, exactly. It's 2 people in a different room.
That's it. So let's talk about, say, the first thing that we should think about if that's the case, and we might actually take it from the perspective that, well, you could be amicable with your partner, and if you are, that's obviously a lot easier, because you'd like to think that if you're being amicable, maybe there's some, you're being reasonable in terms of your approach and how you're thinking about this stuff. A lot of the time, it's not the case.
Yep.
So, the two parties aren't talking to one another, which could have probably led from whatever it was that caused the relationship to fall apart. So, taking your position around that, it's different for everybody. We recognize that. So we might err on the more cautious side, saying, okay, it's not amicable. Andrew, first one, taking stock of your financial position early. What does that look like?
Yeah, look, one of the things that will happen legally when you are going through a divorce or when you are separating assets is that you do need to disclose all of your financial assets. What we talk about is getting stock of that position and everyone's position as early as possible. Reason for that is when you know where things stand, it's pretty easy to see, if something has changed and if someone is trying to, in the event that it's not amicable, siphon money aside and, pull money out and all of that stuff. So even though, yes, that's not legal and that's not, part of what should happen, unfortunately it does. So the earlier that you can take stock of absolutely everything, obviously the big ones, bank statements, debts, insurance policies, things like that is the first, kind of step that most people consider. Mm-hmm. But sometimes they forget about superannuation. So, get a super statement early so that if someone has rolled money into another account that they're not disclosing or something like that, is kind of the first step to be able to, at least put yourself in a position where where things are from the beginning, and you can identify if something has drastically changed overnight.
Yeah, one of the things that we encourage when we're having conversations with clients as well too, and this is a generalized statement, but it seems to ring true that when we engage with most couples, there's usually one member of the couple that tends to take the lead on the finances and the financial position of the family unit, which is fine, and that's okay. What we try and do, and also what we encourage, is even though one person may be taking the lead, and we've done previous podcasts episodes on this before as well too, with some really good tips and tricks about how to mitigate some of this, but even though somebody else may be taking the lead, you or the other person, whoever it may be, should actually have an understanding of where everything's at. So assuming that this is the case and the relationship breaks down, you need to take stock of where you're at. You're not relying on memory. You're not relying on previous conversations. You're not relying on rifling through the drawers and trying to find statements and different bits and pieces. It should be mapped out somewhere so you know what's going on at what particular point in time, and it basically gives you the roadmap of where to look, because it makes it that much more difficult, especially one, if you don't know where to look, but if the other party is doing something untoward to try and shift stuff around, it becomes a lot more difficult down the track and costs a lot more. We'll talk about legal fees in a sec, but cost a lot more from a legal perspective as well too. So I think it's an important call out. Yes, it's a reality that usually one member of the household does take the lead on it, but I think it's a responsibility throughout the relationship that you have an understanding. And if you're the one controlling or taking the lead on that, you've got a responsibility to create a framework where you can both access at least the lay of the land very, very easily and very, very quickly.
Yeah, absolutely. Absolutely.
Andrew, legal versus financial advice. I mean, two obviously different professionals involved in that process. What are we looking at?
Yeah, I mean, when you're looking at, I think just understanding where the line is drawn and understanding who needs to come in and when. I think from a legal perspective, I mean, obviously when you're talking about, negotiations, when you're talking about, the next step from progressing things in the separation, the lawyer will do that, and most people recognize that. But understanding when a financial advisor needs to come into it and when you should start seeking advice, because they really do play a complementary role. And when you start talking about separating assets, understanding what assets are going to be right for you, rather than just, what are the assets that I want. I've been involved in some instances in the past whereby a client they weren't a client at the time, but they had engaged a lawyer to start separating the assets. The distribution, from a legal perspective was fine. I mean, it was, in line with the percentage that you'd expect that person to receive at the end of it. It wasn't until they were introduced to us and we actually started to run some numbers whereby, this woman was going to receive the family home, and in addition to that, she was going to receive an investment property that was a holiday house. Mm-hmm. Now, we were running some numbers, and based off those projections and based off, that separation of assets, she wasn't going to be able to sustain her lifestyle in any way. So all good and well that it ticked, the psychological box of, hey, we built this holiday house and our kids love it, and, I still want to be able to take my kids there. And, we've got our perfect dream home, and I really want to, retain the family home so that my kids can still continue to live in the family home. When she was struck with the reality of, okay, well, the holiday house is going to provide insufficient income for your lifestyle. You still want to be able to utilize it. And by the time you take into account land tax and all of those costs, the reality of it, the fact is that you're going to need to return to work. And she hadn't worked for 15 years, was starting to approach her 60s. And it was almost like oh crap, we need to, reverse this position. So making sure that you're engaging with the right professionals and talking about, okay, what actually, it's not about, I need a financial advisor because a financial advisor is going to help me, prove that I need, 70% of the assets and not 50% of the assets or something like that. But, what are the things that are actually important to me? And when we are separating those assets, making sure that you're getting the right assets that's going to meet your lifestyle and what you want out of life, because the implications of it getting it wrong, I mean, in this instance, would have been, if she had gone through with a separation, would have been, okay, well, now you need to make the decision to either sell one of the two properties. There's costs involved with that. There's potential capital gains and, what the implications are on the back end, as opposed to, okay, well, maybe if we, say, we're not going to target those assets and we're going to, request for something else and use that as a, negotiation, which is eventually what ended up happening, that will be a far better outcome for me.
Yeah, so it's not necessarily just looking at the asset pool and going, okay, you got 60%, the other party got 40, great, that's fantastic. It's looking through that and going at the situation, the circumstances of the individual, going, that's great, you've got all of these assets, but interestingly enough, it comes full circle. In the absence of income, you really then notice it and go, well, these assets, holiday homes, absolutely meaningless, because maybe the holiday rental income that I'm receiving is going to be outweighed by costs and land tax. And then great, we can go there over the summer with the kids for 3 weeks, but I still need to be able to afford to run this thing. Yeah, completely agree. Financial advisor can step in obviously with that part as well too. Mediation versus going straight to court. So I guess there's a few practicalities associated with this. Assuming that everybody can have a proper conversation and try and negotiate this without the court system potentially using mediation, I think that's the best outcome possible. That's pretty straightforward. In a lot of the instances, that's not necessarily the case because the relationship has broken down for particular reasons. It could be, affairs, it could be domestic violence, a whole range of different bits and pieces where the parties no longer speak to each other. If that's the case, mediation is going to be very, very difficult. If you've got an instance where somebody has felt like the relationship broke down because the other person did something wrong, they may feel a really negative sentiment towards that person. So they may turn around and say, look, I don't care. I just want to make sure that I get more than them, or I don't want to ever look at them again, or whatever it may be. You're kind of forced down the legal pathway, and that's just the way that it is in those instances. But if you can go through some sort of negotiation, and there's people to be able to help with that process without actually stepping foot in court. Yes, the court need to sign off on it and so on and so forth. But if you can arrange a financial settlement outside of the court system, that's a hell of a lot better and easier. And then when you extend that thinking as well too, if there's custody arrangements for children, gets a little bit more complicated with this. But if you can come to an agreement that works for everybody, including the kids and the two parents, I think that's the best outcome, as opposed to it going to court. Not only the cost, the other thing I forgot to mention is the time associated with it as well too.
And the psychological impact, right? I mean, it's not something that you can go there and kind of isolate. I mean, some people can, but you kind of, isolate and compartmentalize. I mean, it's something that starts to really almost consume your life.
Yeah. Well, absolutely. Andrew, managing cash flow during this transition, real difficult because, well, I guess for most instances that we see, you've got a pool of money where it's the household's money, and then all of a sudden the separation happens and it's like, okay, we need to pull that apart.
Yeah.
What do we think about? What do we look at?
This is where things can start to really become a mess. And it can be really difficult. And this is just me being perfectly upfront and honest in that, okay, so there's a number of joint assets. And I think that when it starts to get difficult is when you're talking about things like, okay, there's, car loans, there's, maybe credit cards may be a different story because they should be shorter term in nature. Because, if you're following financial advice, you're paying that off every month. But, there's a home loan, there's other expenses that really need to make sure that they still continue to get paid, even though you've separated. Now, what makes things, I mean, you can do a financial separation in essence whenever you like, but there's the practicality of the time of, working through it. Where it becomes difficult is you imagine and say that, me and Billy have separated. We're living in a house. We've got bills. We've got expenses. Some party has probably moved out of the house. The other party might continue living in the house. There's still bills to be paid in the house, but the other party is now paying rent maybe somewhere else. How do you make sure that, okay, one, the mortgage is still continued to get paid, that the bills continue to get paid, that everything continues to happen, and maybe there's not that amicability in the relationship where you can have that discussion for, people to contribute jointly? I guess the first thing is it does all come out in the wash at the point of separation, right? So at the point that you do separate, if one party is shouldering the entire burden over the course of separation, then that, count as a contribution towards that separation. And so they should receive an essence part of that money back.
Yeah, it should get equalised.
Correct. So there's that part. But the difficulty is what happens in that transition period. Yeah. Like if I can't afford to pay for everything, or if Billy can't afford to pay for everything, what can you do? I think the first step is, if it's amicable, decide and discuss this at the time of separation. So, negotiate and say that, hey, I'm going to contribute X amount into our joint account. You're going to contribute X amount. That's going to take care of, all of these assets, and make sure that we can just keep things moving. If it's not amicable, and you're, in essence, the one that is shouldering the burden, start engaging with your banks, start engaging with financial advice sooner rather than later. And what I mean by that is, if you do nothing and all of a sudden there's mortgages that don't get paid, all of a sudden there's car loans that don't get paid, it will impact your credit rating. Yeah. Whereas if you start to talk to the bank, explain the situation, there's an element of financial hardship because of X, Y, Z reason, you put a pause on mortgage repayments, you can take steps to prevent it impacting your credit, impacting your assets, making sure that you're giving yourself enough runway where there isn't an automatic missed payment on your credit file and that's it. Because you can explain, it will still show up on your credit file that, there was financial hardship and your mortgage was paused, but you can explain that to a future lender that X, Y, Z was happening. It's a lot more difficult to explain when there's missed payments.
Yeah. No, look, you're absolutely right. I think that rings true with everything. If you're proactive in terms of engaging with those suppliers that you've got credit with, a lot of them, and there's regulation that sits over the top, but a lot of them are going to be willing to play ball. This is something that they go through every single day. So they do have a process involved of how do they support their customers through that. But that's a really good one. Engage with them early, because you don't want the additional stress of that on you as well too. You're going through enough. You don't want a creditor knocking on your door basically saying, hey, you're late or you owe us money. Burying your head in the sand is definitely not the way to go about it.
Yeah, and another thing, when you're starting to talk about all of this, it's really, speaking to the right people can have a really huge and profound difference, and even something a small conversation. And this is something that is recent in my mind because it was as recent as last week. But I've got a client who they've separated. There's no reconciling the relationship. And he's pretty devastated about it and almost not burying his head in the sand, but just doesn't want to go through the process because there's already so much going on outside of just the financial separation. Knowing his circumstances, his mother is not doing very well, and there's a potential that, touch wood, his mother passes away. It is and one of the unfortunate conversations that I was having is that it is in your interest to, as much as you don't want to, emotionally go through all of this, but it's in your financial interest to go through this as soon as you possibly can, because touch wood, if your mother passes away, assets are or the asset pool is at the time that you're separating the assets, not from the point in time in which the relationship has broken down. So let's say relationship's broken down, you've separated, you haven't finalized separation of assets, and all of a sudden you get an inheritance. That inheritance is part of the overall pool of assets versus you separate, you financially separate. So you separate all your assets financially, and then you can, if there's an inheritance that comes in, at least you're protected from that sense. So, and look, some people will take that information and say, yep, I need to take action. Other people will say, yep, good to know, but still too much going on. A simple conversation, I mean, you're talking about hundreds of thousands in potential difference. So engage with people early, understand what the requirements are, and at least you can make an informed decision from there.
Yeah. Andrew, a really important one is unauthorized transactions. So one of the things that you could potentially consider, and it depends on the account ownership. So if you've got a joint bank account, a joint investment account, you can ring the product provider, tell them that you've separated, and basically say you're not authorizing, assuming that the authority on the account is joint, you're not authorizing any transaction to go through unless you both agree to it. So that's a way to be able to safeguard. Most institutions, as soon as they hear that, they don't want to be releasing the money to the wrong person, so they'll basically just lock the account and that's it. That's one way of doing it. If you're going to that extent, you need to move on that fairly quickly, because if you are thinking that, you're probably concerned that the other party might put their hand in the cookie jar and start to move things around. So with all of the other stuff that you need to deal with, that's something that you need to move on to, quite early from that perspective. But just making sure that that's the case. A really big one that we see in this instance, where families have got a large amount of money sitting in offset accounts. That money is available to be able to, or even redraw potentially, depending on the product feature of the account. Large pools of money that are sitting there that are easily accessible. So once again, similar to what we're saying in terms of talking to your creditors, get involved with those institutions early, tell them what's going on, see if you can put a freeze on it. It'll preserve what's in there. It's not going to stuff anything up, but what it will do is it'll prevent people from putting their hands in the jar. In this instance, your ex-partner, to be able to try and take some of that money out of the system and move it around. Yeah. Andrew, superannuation and property.
Yeah, I mean, look, some of the common, let's say mistakes, but some of the common things that people don't consider is, I mean, firstly, updated property valuations. You're relying on a property valuation from 12 months ago. The market's changed all of a sudden. So that's a really, simple and easy one. But considering the tax implications, maybe going back to my earlier example is what you're going to do post-separation is going to inform what the tax consequences are now. So, for instance, you may say, hey, you know what? I'll take the investment property that's got a big capital gains tax liability that's associated with it, and that's fine because my intention is, and because there's a big potential capital gains liability, you get a larger pool of the overall asset, the overall asset pool. But I'm going to move into that property. That's going to become owner occupied. I'm going to live in it. Intention is for forever. So I don't actually mind if there's a potential, capital gains liability that's associated with that property, because I'm never going to realize it. So understanding what the tax implications are going to be of one asset versus another asset, and what your intentions are going to be on that property. Some of the other things that people, maybe consider or maybe don't consider is when you're looking at like superannuation, for instance. Some strategies that we've deployed for clients is, okay, I am, my intention is that superannuation is going to be my main wealth vehicle. Mm-hmm. Maybe there's a lower value on superannuation because it's preserved and we can't access it yet. But I know that long term, that's going to be my plan, and I've got maybe 5 or 10 years until retirement. And so, yes, I'm going to, I'd rather have more superannuation and less of another asset because of XYZ reason. Or maybe superannuation is valued because you're in retirement phase the same, but I'm going to continue working. So I'd rather have less superannuation, and then I'm going to make a concessional contribution with some of the other assets into superannuation so I can claim a tax deduction on it. So some of the things that you can consider to just make sure that it's right for you is really important.
Yeah, on the super one, the one that I tend to find probably is the most common client scenario where you've got, say, one main income earner, so they have a lot more superannuation just naturally. Relationship breaks down, you look at the assets on paper and go, okay, this is what it looks like. So I'm going to get a large, and I've seen this before, we're going to transfer a large amount of my super into yours.
Yep.
Right? Which is, the way that it should be, but that doesn't help them today because the rules of preservation still apply. So you can't actually use that superannuation to help support you living until you can access super down the track. So one of the things that I'd be conscious of, and you were alluding to it, is basically as part of the financial settlement, you need to take that into consideration. And I've seen it in one particular instance where there was a fair bit of money that was due to the other party from the main breadwinner. Most of that was given to that person via superannuation. So it was a huge amount. And when you look at the percentage split, it was higher than a 50-50 split, but that person couldn't do anything with it because it was couldn't do anything with it to help their lifestyle and income needs today because it was tied up in superannuation. So that's probably the call out with super. Yes, it's fantastic. It's great. It's got all of these positive things to it. But even when it gets moved around and given to someone as part of a financial separation or settlement, the rules of preservation still apply. You can't touch it.
Yeah. So how much more valuable is it? Is it more valuable or less valuable? And it depends on your situation.
I think it's one of those things, and we're probably going to say it at the end, but I'll say it now, is you need to get advice on it before you agree to it, which goes back to what you were talking about in terms of your financial advisor and your legal professional need to work hand in hand at this approach.
Yeah, exactly. Yeah. I think some of the easy ones that you can also forget as well is reviewing insurances. From an estate planning perspective, a will is null and void the moment that you have divorced, and so all of a sudden you need to do another will, otherwise the previous one is no longer valid.
Andrew, just on that, divorce, not separation?
Correct. Obviously you want to make sure that that's taken place.
Yeah.
But then considering, okay, from a life insurance or an income protection, do I need more cover? Do I need less cover? The obvious one is changing beneficiary nominations, and that's on superannuation and insurances as well. But I think you also need to consider, okay, now that there's maybe, less debts, do I need less cover? Or is it now that the burden is only on me and I need to, make sure that I'm still caring for the kids and putting a roof over my head? Income protection is more relevant. Understanding your insurance needs is also really an important aspect to all of this as well.
Yeah, the beneficiary one is really easy to miss.
Yeah.
You can, if you don't think about that, or if it's not brought to your attention, you can get caught out. Even if you enter into a new relationship, your money can go to your ex-spouse. Really bad set of circumstances if that's the case. So you want to make sure that you tick that box off as well too. Andrew, probably to finish up, in terms of post-separation, rebuilding your financial confidence, because obviously that's going to take a hit, especially for those people, like I was describing before, maybe the finances weren't your area that you were managing in the household. Maybe it was that for your ex-spouse. How do we move forward in that instance? Setting new goals, different strategies, advice, guidance. What do we think about?
Look, I've seen this happen before. And not to sort of toot our own horn or anything like that, but
no, toot it.
It can be a difficult exercise.
Yeah.
I think to really start. Your focus at the point of separation is let's just get everything split, and then all of a sudden you get to a point where you've split everything, and it's okay. Now I need to focus on something else, which is rebuilding my financial plan. So it can be a lot mentally, and there can be a lot that's going on, and you can be just emotionally exhausted. That being said, the impact of doing nothing and saying, okay, I'm emotionally exhausted, I'm just going to leave everything just where it is, I need some time to just rebuild my life. And now you're 2 years down the track and you've lost 2 years of compound growth and what you could have done at the time. So sometimes it's, and been through this many times where a client has separated, they've separated from their partner, and maybe you're not doing a fully fledged, deep dive on new goals, and you're not building a full roadmap and a full plan. And for some people, that's the right strategy because that's part of the healing process, because they're then, looking at something else on their own. But for other people, it's just too much. And it's all right, let's not go through that whole process, but let's just make sure that everything is set up efficiently. Let's make sure that we're, doing the right thing today that's not, going to bite us in the backside when we're looking back on things sort of a couple of years. So it doesn't need to be a full deep dive because maybe you're not ready for that, or maybe you just don't know where life is going to be. But it's hey, let's just get some advice. Let's make sure that I'm investing my assets in the right assets. Let's make sure that I'm doing all of the right things and not need to, go down a fully fledged goal setting process. In order to avoid doing nothing, and then you're a year, 2 years, 3 years, 5 years down the line, and there's a whole heap of missed opportunity and missed compound growth, and maybe you need to start taking some more drastic action to still achieve those goals.
Yeah, it's a shame because the time that you need to do it the most is the time that you probably have the least amount of appetite and energy to be able to do it. But yeah, you don't want to be losing, because it can sort of knock you off course for a couple of years while you tend to recover and figure out which way your life is going. But the sooner you can engage with that, and coming back and tooting our own horn, the sooner you can get advice, whether it's just a bit of advice on one particular area or whether it's a lot, definitely worthwhile doing that, because the results are far better. And not only from a financial aspect as well too, but the sense of confidence that one feels and the weight that comes off the shoulders, that's a money can't buy thing in my opinion anyway. So Andrew, good job. We covered that one hopefully well and truly, and gave our viewers and our listeners something to think about if they're going through anything like this, or if one of their family or friends are going through it. Hopefully we've given them some information.
Yeah, absolutely. Bills, thanks again for another great podcast. Always a pleasure jumping on. And again, if our viewers or our listeners have any questions or want to receive any further advice, feel free to reach out to us. Details are in the show notes.
Thanks
very much.
Thanks for listening today. If you have any questions on what we talked about, or would like to have a chat about your money journey, visit us at 360fs.com.au.
The information in this podcast is general in nature and does not take into account your personal objectives, financial situation, or needs. It is not financial, legal, or tax advice and should not be relied upon as such. You should consider whether the information is appropriate to your circumstances and seek professional advice before acting on any of the information provided. Past performance is not a reliable indicator of future performance. This information is provided by Billy Amaritis and Andrew Nicolaou of 360 Financial Strategists Proprietary Limited, authorized representatives and credit representatives of Acumen Financial Planning Proprietary Limited.